What if I told you that a single leak exposed the secretive offshore dealings of the world's elite? Welcome to the world of the Panama Papers and the Pandora Papers, a pair of leaks so enormous they shook the very foundations of offshore finance. In early 2016, an anonymous source leaked 11.5 million documents from the Panamanian law firm Mossack Fonseca. These weren't just any documents. They were confidential files that revealed how many of the world's wealthy and powerful had been using offshore tax havens to hide their wealth. Fast forward to 2021, another significant leak, dubbed the Pandora Papers, further exposed the clandestine dealings of the rich and influential. It was a scandal of epic proportions, sending shockwaves through the financial world. The scale of these leaks was unprecedented. To give you an idea, if you were to print out all the leaked documents and stack them up, they would tower over the Eiffel Tower. Over the years, hundreds of journalists from around the world have worked in secret to sift through these mountains of data. When the stories broke, they implicated a staggering number of high-profile individuals. We're talking heads of state, celebrities, and billionaires. From Russia's president to the Prime Minister of Iceland, from movie stars to professional athletes, the list was as diverse as it was extensive. At the heart of all this were firms like Mossack Fonseca, a little-known Panamanian law firm that had quietly become one of the world's biggest providers of offshore services. They set up shell companies and offshore accounts, tools often used to obscure ownership, dodge taxes, and launder money. But here's the thing. Much of what Mossack Fonseca did was technically legal. It was the secrecy, the lack of transparency that raised eyebrows. This was a world where the rich could operate by a different set of rules, hidden away from the prying eyes of regulators, and these unprecedented leaks shed light on a shadowy world of offshore finance. But what can we learn from it? Stay tuned as we delve deeper into the lessons from the Panama Papers, the Pandora Papers, the art of structuring assets, and the current regulatory environment. Behind the scandal, the Panama Papers revealed complex systems for structuring assets and businesses. But what exactly does that mean? Well, let's break it down. Think of structuring assets and businesses as organizing your closet. Just as you might sort clothes by season, color, or type, businesses can structure their assets, like property, investments, and cash, in a way that makes sense for them. This could mean organizing them by location, by risk, or by tax implications. For instance, a company might have various operations in different countries. To manage this efficiently, they could structure their business into separate entities based on location. Each entity would then be subject to the laws and regulations of its respective country. This is akin to you having separate drawers for your winter and summer clothes, each with its own care instructions. Now let's talk about asset structuring. This is essentially about protecting your assets from potential risks. It's like storing your expensive jewelry in a safe instead of leaving it out on your dresser. You're still the owner, but you've put a protective barrier between your precious assets and potential threats. In a business context, asset structuring could involve creating a holding company to own and control other companies and assets. This could protect the assets from business risks and might offer tax advantages too, but here's where things can get murky. While these systems can be used legitimately, they can also be manipulated. It's like using your closet organization to hide that ugly Christmas sweater your aunt gave you. On a corporate scale, this could mean using complex structures to conceal assets, evade taxes, or even launder money. That's essentially what was exposed in the Panama Papers. Behind the labyrinth of companies and assets, some individuals and corporations were using these structures for less savory purposes. Structured correctly, these systems can provide legitimate benefits. However, they can also be manipulated for less savory purposes. So, it's crucial to understand the line between smart structuring and unethical or even illegal practices. That's what we'll explore in the next scene, so make sure you stick around. The Panama Papers served as a wake-up call for many. So what lessons can we draw from this case? Well, let's dive right in. The first major lesson from the Panama Papers is about the importance of transparency. In our interconnected world, it's becoming increasingly difficult to hide financial dealings, no matter how complex or convoluted. The Panama Papers showed us that even the most sophisticated networks of shell companies can be exposed. So if you're a business owner or asset manager, It's crucial to be transparent about your finances. It's not just about obeying the law, it's also about maintaining your reputation. A stain on your integrity can be far more damaging than a hit on your wallet. The second lesson is the risk of complex asset structures. The Panama Papers revealed a web of offshore companies, trusts, and foundations. While these structures can be legal and legitimate, they can also be easily misused. The more complex the structure, the harder it is to monitor and the easier it is for things to slip through the cracks. So, if you're managing assets, it's wise to keep things simple. Complexity can lead to confusion, and confusion can lead to mistakes. The third lesson is about the power of whistleblowers and investigative journalism. The Panama Papers were leaked by an anonymous source, and it took a team of investigative journalists to make sense of the data. This shows that in our digital age, anyone with access to information can potentially expose wrongdoing. As a business owner, it's therefore vital to foster a culture of honesty and integrity within your organization. The final lesson is the importance of due diligence. The Panama Papers showed that many individuals and companies failed to do their homework when dealing with offshore entities. It's essential to know who you're doing business with and to understand the legal and regulatory implications. These lessons are not just for the rich and powerful, they're also valuable for anyone who owns a business or manages assets. You might be wondering, are these practices still valid in today's regulatory environment? Well, let's dive into that. Since the Panama Papers leak, there have been significant shifts in global regulations. Governments around the world, jolted by the revelations, took steps to tighten their regulatory frameworks, aiming to prevent such incidents from recurring. One change we've seen is an increase in transparency requirements. Many jurisdictions now require businesses to disclose more information about their ownership and control structures. This is a direct response to the Panama Papers, where complex and opaque structures were used to hide assets and evade taxes. Today, hiding behind layers of shell companies is much more difficult. We've also seen a rise in international cooperation. Countries are sharing information more freely to prevent tax evasion and money laundering. The Common Reporting Standard, an agreement among over 100 countries, is a prime example of this. It requires financial institutions to exchange information about accounts held by tax residents of other countries. This makes it harder for individuals and businesses to hide their assets offshore. But it's not just about preventing illegal activities. These changes also affect legitimate business and asset structuring. For instance, businesses must now consider these transparency requirements when setting up their corporate structures. The increased scrutiny means they need to be more diligent in their compliance efforts. They must ensure that their structures are not only legal, but also able to withstand the increased scrutiny. At the same time, businesses can no longer rely on secrecy as a strategy for asset protection. They must instead focus on legitimate methods such as diversification and insurance. In short, the post-Panama Papers world demands more transparency, more compliance, and more legitimacy. So, are the practices exposed by the Panama Papers still valid today? The short answer is no. The regulatory environment has changed significantly, and businesses need to adapt to these changes. They must be more transparent, more compliant, and more legitimate. The Panama Papers have undoubtedly influenced how we approach asset and business structuring today. So, what should you take away from this discussion on the Panama Papers and asset structuring? First and foremost, it's crucial to remember that while the Panama Papers have shown us the darker side of complex asset structures, they've also highlighted the importance of ethical business practices. We started off by unveiling the Panama Papers, shedding light on the intricate labyrinth of offshore companies and shell corporations. It was an eye-opener, wasn't it? A stark reminder that while the system can be exploited, it's not without its risks. Then we dived into the art of structuring assets and businesses. We learned that there's a fine line between strategic planning and crossing into unethical or illegal territories. Structuring assets is a crucial part of businesses, but it's equally important to ensure these structures are transparent, legal, and above board. Following on, we extracted lessons from the Panama Papers. The scandal served as a wake-up call to the global community, emphasizing the need for regulatory compliance and the consequences of disregarding it. It's clear that avoiding transparency and compliance can lead to dire consequences. We then looked at how the Panama Papers fit into the current regulatory environment. The world has indeed become more vigilant, with tighter regulations and more scrutiny. But remember, regulations aren't your enemy. They're there to ensure a level playing field, to foster trust, and to maintain the integrity of business practices. To sum it all up, the Panama Papers saga has underscored the importance of transparency, regulatory compliance, and ethical business practices. It's a reminder to all businesses, big or small, that while navigating complex asset structures can be daunting, it's essential to do so in a way that upholds integrity and trust. Remember, the Panama Papers have shown us the potential pitfalls of complex asset structures, but with the right approach, you can navigate these systems successfully and ethically.